So I'm Chye, a financial market analyst and coach at Beyond Insight, and this is your express session to get up to date with the stock market. We'll cover the market highlights, major stock market indices performance, and also the upcoming potential opportunities and risks out there. Just an important note before we proceed, whatever we share here today is based on the latest data and facts. If there is further development, things may change. And we want to make sure that you know that we are not a licensed investment advisor and we do not manage customer funds. We are an educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your decisions, hence be able to get better results. If you are looking for stock tips, this is not the place for you. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. Okay, let's proceed. Let's start today's market update with the market highlights as usual. So for those that are active in the stock market, how was the market performance over the past 2-3 weeks? You may type your view in the chat. Yeah, bad. Okay, bearish. All right, so from the last update during the money market updates in the September session, we already mentioned about the downtrend, and it happens after the FOMC last round. And the S&P 500 and Nasdaq 100 that track the tech stock still continue to go down for month of October. And the inflation rebounded in the United States, while the inflation in the Europe and also UK region remains at high level despite trending down over the past few months. We can see that the UK inflation currently is at around 6.7%, which is at very high level still. And the Europe inflation is around 5.2%. So for the month of October, what are the key events you guys observe? You may type the events that you observe in the chat for month of October. Yes, we have the war. We have war, we have China economy, and multiple events happen at this month. We have an eventful month for this October. So first we have the hawkish Fed language. Hawkish means the Fed want to tighten their, it's a more tightening policy kind of language where they want to slow down the economy to bring the inflation down. So during month of October, Jerome Powell, during a press conference, Jerome Powell sees inflation still at high level and he does not think that the interest rates are too high. So this indicates that potentially Fed may continue their tightening policy until they see inflation start to within their control. And they are still committed to the 2% mandate goal for inflation. So anyone here would like know that what's the Fed objective? What is the Fed objective? The Fed objective is to maintain stable prices and maximum employment. So currently they are trying to maintain price stability. They want stable prices for all the goods, all the essential items, and also at the same time they want to ensure maximum employment. And with the inflation rebounding and we have a few geopolitical tensions, for example war in the Middle East, so the fuel price currently going up after the tension in Middle East. So people may foresee the inflation may not be stabilized yet, and Fed may continue with their tightening policy until the inflation stabilizes. And they are willing to slow down the economy in order to control the inflation. And next we have the Middle East tension. So recently we have another war in the Middle East region where Israel and Hamas war, and this caused the oil price to went up. And the reason the oil price went up is because people worry about the supply disruption if let's say the war spread over beyond Gaza region. From recent news, we can see that the war start to spread beyond Gaza region, where we see Israel start to go over the borders and airstrike Syria and so on. So we may need to continue to monitor the situation over there and continue to monitor whether the oil price continue to go up, because if oil price went up, then the inflation potentially may go up as well. And next event, we have the US tightening the AI chip sales rules to China, where it may affect AI chip companies such as NVIDIA and also AMD. However, NVIDIA did mention that it has a short-term impact from the tightening of AI chip sales rules, but in the longer term, the outlook still positive. And majority of the big tech data centers will be located in the US, hence it will affect NVIDIA sales to China, but other companies that planning to expand their AI chips or AI servers in their data centers still may continue to proceed. And also during month of October, we see consumer staple sector selling off. And consumer staples often viewed as dividend stocks. Usually the consumer staple stock are often viewed as dividend stocks by all these funds. And usually their payout is around 2 to 3% dividend yield. And they are currently facing asset competition from the money market fund. Money market means something like our FD is a fixed income asset, something like our FD, where when the funds park their cash, they usually park their cash to the money market fund and they get around 4 to 5% return currently. So consumer staple stock, especially those dividend stocks, has been facing competition from all these money market funds, while when the funds are moving out from the stock market. However, there are still good consumer staples company despite the sell-off. They are at good valuation now. You may continue to monitor if there is a turnaround for opportunities for you to enter all these consumer staple stocks. But for now, they are still in a selling off mode and they are still in a downtrend. And at the same time, US 10-year Treasury yield are close to 4.8% yield, which is at the high level. So the bond, what does this mean is the bond market still see this as a potential rate hike by the Fed, and the bond market are still not doing well. People are selling off their bond. That's why their yield, the bond yield is going up. And the bond yield will be an indicator for loans. This will indicate high borrowing cost because higher treasury yield, higher interest rate means that mortgage rate and also the loans will be high. The mortgage rate and also the loans interest rate will be high, which is bad for the stock market because the cost of borrowing is increasing, and corporate with high debt will need to pay off will have cash flow issue by paying off their debts due to high interest rate, and also it's more expensive to borrow now, so companies are more difficult to expand their business by taking up the loans. And lastly would be the economy slowdown in China. So in China, what kind of economy slowdown you heard about China? You may type in the chat. What type of economy slowdown or what type of events happen in China? Yes, property crisis. We have property crisis in China, high unemployment, and also funds are flowing out from China. Factories are moving out as well. So you can see that a lot of MNCs like HP, Apple, they are all moving out their supply chain from China, pulling out their factories, move to India or Japan or even Southeast Asia. And property crisis also will cause other related issues like banking issues and so on. So their economy now are slowing down over there. And they also have slowed down in their inflation. Their inflation at 0%, which is not healthy as well. This shows that consumers are not spending their money. People are tightening their belts due to that. And to summarize that, the US stock market currently in a downtrend, and we are at the earning seasons now. All the companies are announcing their earnings, and the tech stocks earning result will mix. So any one of you notice any tech stocks or monitor any tech stocks that announced their earnings result recently? You may type which company you are monitoring in the chat. Okay, so we have Microsoft announce their earnings, we have Google announce their earnings, and we also have Meta announce their earnings. However, with these three mega tech companies announcing their earnings, the stock market could not rally. So this is something abnormal, and it can serve as a big warning for the stock market for the upcoming weeks, where the stock market may continue to sell off on good news. And the stock market still outlook will be still mainly will be focused on the macro outlook, which will be a key figure for stock market recovery. You may need to monitor the US 10-year yield, the USD strength, and the Fed decision to see whether we have more clarity upfront. So for example, the Fed policy, whether they are stabilizing or have more certainty in their policy, or they are still continuing to monitor all this data and to have further changes based on the economic data. So with all these events, all these gloomy events, sounds like gloomy, what investor can do? So despite the selling off, the downtrend is, to me, actually is an opportunity. So investor can wait for opportunity at good valuation level. Even a downtrend, despite I said it's an opportunity, you may not buy immediately. So do not buy immediately just because of it's coming down. For investor, you need to work on the valuation and wait for the right level using the technical charts to plan your entry. I will cover that later on during the opportunities portion. And what about traders? What traders can do? So is any one of you here mainly are traders? You may type me in the chat, mainly are traders. All right. So for traders, you may short the weaker ETF. So usually we not recommend shorting companies. If let's say you want to short, you can either short the related ETF, the sector or ETF that are weaker compared to the overall stock market indices, or they are having impact by all these key events I mentioned earlier, like affected by high interest rate, affected by the war, and so on. And traders also may trade intraday to capitalize the short-term volatility. So as we know, when market is choppy and uncertain, coming down on a downtrend, usually the stock market tends to get volatile. So when stock market is volatile, the price movement tends to move in a bigger range, and this will be beneficial for intraday traders. Okay, so these are the stock market performance. As you can see that over the past 10 years, the US market has been performing well. S&P 500 and also the Nasdaq 100 has been providing very good returns. And China has been moving sideways over the long term. I mean, over the past few years, they has been moving sideways. And while Hang Seng will give you negative return, there has been a long-term downtrend for Hang Seng Index. And also for the KLCI, they has been declining as well, but recently holding sideways while the other part of the world are declining. So we can see that US stock market currently, despite the long-term uptrend, is coming down recently, is coming down. And like I mentioned earlier, if let's say it's coming down, it does not mean that you can buy immediately. We may need to continue to monitor the key level. However, we notice that there are some great companies already at good valuations. For example, those Google, Microsoft, some of them are already in a very good valuations level, but we need to confirm it using technical charts. We need to confirm whether their key support level in the technical charts are holding. And while investors are waiting, they can do their fundamental studies, study about their valuations, study about which entry point you want to enter, and so on. And you may want to continue to monitor all these great counters at good valuation levels. And we can see that as an investor, when we want to invest, we also want to choose a stable market that gives us higher probability to success. So from here, which country provide you the most consistent return over the past 10 years? You may type in the chat. Which country provide you the most consistent return over the past 10 years? Okay, we can see that US providing the most consistent returns over the past 10 years, especially the tech stocks. So does anyone of you know why? Why US companies providing more consistent return compared to other stock market? One of the main reasons. Okay, volatile, may not be the main one. Strong dollar. Okay. So first of all, let's unlink all the macro events first. So first of all, in the US, how many global brands or company that are well run in the US you heard of in the US itself? Global brands compared to other country. They have more global brands, right? So global brands like Microsoft, global brands like Apple, they are selling their products worldwide. So this is one of the reasons the company fundamentals are helping them. They have a lot of strong companies, a lot of strong global brands. And of course, other factors like strong dollar and so on also is one of the part of the reason, but the basics one will be in the stock market. If you compare the US stock market against other countries' stock market, they have more global brands, global companies, and those global companies are selling to the world. Hence, their revenue growth compared to other stocks will be better. And I would say currently the market is still in a downtrend, so and it will be short term, so you may continue to wait. Funds may come back in once the valuation is at an attractive level. And when we have more certainty from the Fed decision, so currently the Fed decision still cause uncertainty in the market. So when we have more certainty from the Fed decision, which is likely around end of this year because the Fed mentioned that they are going to have one more rate hike, either it's November or December. So the upcoming two FOMC, the Fed meetings will be very important for investors to watch out. They can move the market big time, so you may need to monitor these two events. And likely, we will see some stability around end of this year. All right. So also, like I mentioned earlier, China having economic crisis, funds are flowing out, factories are moving out, and all these Western countries try to diversify their supply chain and so on. So you can see that funds are flowing out from China. So if let's say funds are moving out from China, which country or where the money likely will go? You may type in the chat. So if let's say all these funds invested in China in the past flowing out from China, which country likely they will flow to? All right, potentially. So closest one will be India. They are doing something similar to China in the past. They have high population. So factories, low cost factory may move to India, and all these advanced semicon companies, due to the geopolitical tension, they may move to Japan region. And with the strong dollars and also attractive US GDP still strong, and still a lot of great global companies, funds may move to the US as well. So these three countries, US, Japan, and also India. But I would say US, since we're investing mostly in US and US has the most established companies, you may focus on US as well. So currently, why I said US having a strong economy, because currently the US GDP is around 4.9%, which is above the forecast of 4.5%. So in overview or overall, their economy is still healthy. Okay, so other than that, there are also money on the sidelines. So this is the latest updated money market funds tracking. So in the past, I was updating 5.3 trillion. So latest quarter, quarter 2 2023, it showed that there is still a record of 5.9 trillion in cash on the sidelines, according to the money market funds chart here. And part of the reason why investors are stocking up on cash is to take advantage of the current high risk-free rate. So currently, United States interest rate is around 5.5%. So by just parking in the money markets, you can get 5.5% interest return, which is quite high. And the massive 5.9 trillion pile of cash could act as a fuel when the funds are moving back to the stock market. At which point, when we see the interest rate hike peak and the Fed start to be not so hawkish, they start to like more lenient. And when people are looking at the stabilization of the interest rate, then potentially this money will move back into the stock market, either the stock market or the bonds market, and they may benefit all these global brands or big companies like Microsoft, Apple that are having good valuation now. And the money market funds, like I mentioned earlier, will be the something like our FD. It will pay you an interest when you store the money in the market money funds. Okay, so come to the most important part of this market update, what to focus on coming months. So as an investor, we usually manage our risk first. So I'll cover about the risk first. So from what I update earlier on in the past slides, in the highlights of the month, what are the three main uncertainties that causing the stock market? What are the three main things that causing uncertainties in the stock market? You may type in the chat. What are the three main things now that causing uncertainty? Yes, first we have geopolitical tension, the war, the tech war between China, US, the war between Russia and Ukraine, and the war in the Middle East now. And secondly, we have the high interest rate where the Fed decide to maintain the interest rate at a high level for some period due to they see the inflation still high and they don't think that the interest rate is at the high level. And lastly, we will have the economy slowdown in China. So how we analyze the risk and how we identify the risk then. So first of all, high interest rate. So a prolonged high interest rate may impact affordability. So for example, it's more expensive to take up loan, and also it's more expensive to take up credit. So people are less likely to take up loans to buy house or take up loans to expand their business, or like consumer like us will be less likely to take up loans to purchase purchase new appliances or upgrade our laptop or also smartphone and so on. And also with the high interest rate, it will cause the dollar to increase, and it may impact affordability for Asian country as well. For example, iPhone price. If you compare iPhone price few years ago versus now in Malaysia, do you see what is the difference? Is getting more expensive or getting more cheaper for iPhone? Yeah, more expensive. This is due to a stronger dollar and a weakening ringgit. When US increase their interest rate faster than Malaysian Bank Negara increase our interest rate, you can see that there is a different currency differential, forex differential between Malaysia and also US. And we can see that with the strong dollar, it impact our affordability, and it will affect those US company sales that rely on overseas as well. So there will be lesser people buying those branded stuff from US compared to brand from other country because of more expensive now due to strong dollar. And with the high interest rate prolonged, it will also cause bond market risk. So for example, those banks with a high bond exposure or high bond investment, it may cause some uncertainty as well, which we have last year, where we have early this year, we have the SVB bank issue. So you can see that banks are also exposed to bond market, and they were under the categorized of high risk sector because of the high interest rate. And next, we have the housing market risk as well, where we have high mortgage rates. Mortgage rate. So in the US, the mortgage rates are approaching around 8%, I think, 8% in the long-term mortgage, around that region, around that level, which is very high to own a house now, which is very expensive to own a house now by going through the mortgage loan. And with the prolonged strong US dollar, it may be negative for global stock market. Like I mentioned earlier, it may affect the US companies' revenue because their sales overseas may drop as the US dollars are getting stronger. And even they having the same sales, when they are reporting their revenue back to US, it will become lesser. Let's say, for example, companies selling in China, and if let's say US dollar keep on appreciating and they are selling their products in local currency in China, so when they report their revenue back to the US, it may be lesser now compared to if let's say they are selling in US dollars. So the strong dollars may affect those companies that have high foreign revenues. So do avoid companies with high reliance on foreign revenues and also growth. For example, like Nike and also Starbucks. So they are rely heavily from China. Their revenue growth rely heavily in China, from China. So with the China slowdown, this may affect their revenue reports. And next will be geopolitical tension. So currently we have two wars happen at the same time. A major war happen at the same time. One of them is the Ukraine-Russia war, and another one will be the Middle East war. And we have another geopolitical tension in Asia region. Anyone know which region will likely to have still having a geopolitical tension? It's not a war, but having geopolitical tension. Yeah, China, between China, Taiwan, and also US, they are still having geopolitical tension, where we have the tech war, we have the trade war still ongoing. So this will cause some uncertainties to the stock market. And if let's say you are an investor approaching this, you may choose to stay off from those companies that highly exposed to China, highly exposed to Taiwan, or highly exposed to all these other regions like Israel, or Palestine, or Ukraine, or Russia. So you may avoid those companies that rely heavily on this region that's still having geopolitical tension. And also we do see that slowing consumer spending. Like I mentioned earlier, Fed may slow down the economy to bring down the inflation. They may continue to do their tightening, continue to implement all their tightening policies. And at the same time, the China economic crisis. The China economic crisis will also affect the world, or especially the US stock market recovery, because China are number 3 spender in the world, and number two big economic countries in this world. So their consumer market are huge, and this may affect the US stock market recovery as well. And like I mentioned earlier, avoid those with higher dependency on China, and also at the same time avoid financial sector, because financial sector tends to have a lot of bond exposure. And also retail industries, with the slow down consumer spending, retail industries tends to slow down as well, because of people are tightening their belts, and all this discretionary spending will be cut down. If let's say you are planning your budget during economic slowdown or during high interest rate, usually people tend to cut down the discretionary spending first. All these branded stuff, expensive bag, expensive shoe, or luxury computer and so on, they will temporarily stop the spending first. All right, after I share all this risk perspective, let's take a look on the opportunities available out there. So where do you think that opportunities usually lies in the stock market? Where do opportunities lies usually in the stock market? Anyone would like to answer me in the chat? IT, all right, tech. Okay, so usually as an investor, when we look at opportunities, we are looking at growth. We want to look at the sector that's still providing growth, good earnings, providing growth, and also showing potential growth. So let's focus on some key opportunities here. So as an investor, when we're approaching this kind of market with high uncertainties, with the risks I mentioned earlier on, so what we can start is we can start with industries aligned with key themes. So what does this mean? This means that we want to focus on industries that's showing potential growth, or showing high growth. So we can start with mega trends. So what is mega trends? So mega trends is something that are going to be next revolutionary changes, bring next revolutionary change to the world. For example, like AI and cloud computing. Of course, we still have other mega trends like big data, clean energy, next generation broadband, and so on. But we will focus AI and cloud computing now. So anyone of you know which companies currently are in line with cloud computing and also AI? You may comment or type in the chat. Which companies? Which company are in line with AI and also in line with cloud computing? Yeah, Microsoft. So once you pick the industries, we know that it's technology companies, it's software companies, cloud computing companies related. So for example, Microsoft, then we can zoom down. So during high interest rate, we also want companies with low debt, low exposure to bonds, and come with strong cash flow. So for example, when we come to this criteria, usually we can browse around the income statement of the company. We can browse around all their fundamental facts to identify and select those companies that have low debt, low exposure to bonds, and also strong cash flow. This will mitigate the high interest rate risk. And also when we navigate for opportunities during this kind of environment, we also want companies that less vulnerable to tightening of consumer spending. So let's take AI or cloud computing as an example. Does this related company like these companies in the cloud computing or AI, do they easily affect by consumer spending, tightening of consumer spending? Or do you think that corporate may still need to continue to expand their data center and continue to spend the capex? They still need to continue to spend their capex, right? Because if let's say they never upgrade their facilities or never upgrade their software or never upgrade their data center capabilities, they may lose out to their competitor. So this, for all these cloud computing related companies, AI related company may still need to continue to spend their capital expenditure to upgrade their system. And like I mentioned earlier, with the strong US dollar, you may need to focus on companies with lesser revenue or lesser dependency on foreign markets. So when you are selecting companies, you may need to select those companies with lesser exposure to China or even Taiwan region. So you may need to go through their annual report, need to go through their annual report and so on to study where is their revenue source and so on. So you may want to avoid those companies with high foreign exposure or at least lesser dependency on China and Taiwan region because they are still having geopolitical tension. And you may need to go for companies that are more balanced in terms of their revenue. For example, more exposure to the US local market or more exposure to the Europe market, but not heavily exposed to China or Taiwan. And lastly would be money on the sidelines. Like I mentioned earlier, 5.3 trillion in cash. And now we have a lot of tech stocks or these companies that in line with all these mega trend in very good valuation level. So they may potentially come into the stock market or bonds market once things are stabilized and once Fed have their policies are more stable or less uncertainty in their policies. So once Fed decisions are stabilized, people are seeing that they are more predictable, then funds may come back to the stock market. And if you are a fund manager for the 5.99 trillion, which market do you think they will flow to with the current environment? Which country they will likely to deploy their money if let's say they are flowing out from China and when the Fed policies are stabilizing? Yeah, likely US stock market because they are still having the best companies. They are still have a lot of fundamentally strong company and there are still a lot of company in line with mega trends are listed in the US. So you may take this downtrend to learn and capitalize to get into these great stocks when the stock market recover. And like I mentioned earlier, all these opportunities, how to navigate along this, we did cover that in our workshop and we did have a system for that. And something to bring up is despite all these risks, all this downtrend and sell off, usually when the valuation, when the stock market is stable, the valuation tends to be very high. So this is a time where when a lot of unstable, when this is a kind of unstable market and when there is a lot of uncertainty, this is where you will get very good deals, from all these strong fundamental stocks at very good valuation. But to do that, you need to know how to manage the risk and also protect your capital. So The stock market currently still the best instrument to generate higher returns than inflation, and the stock market still has the most consistent return with if let's say you invest in high quality companies. So market does not pull back often. This sell-off will be the best opportunities for you to learn, and also give yourself some time to practice, and also give yourself some time to absorb all the learning materials. And when the market stabilize in December, in the next few months time, then you are well prepared. And also during 2024 we will have an election in the US end of 2024, and usually there will be an election rally. So having said that, having said that all the opportunities are out there, you want to do it in a safe and systematic way. So we have the most systematic course in the market, and we have the most versatile strategies as well. We cover different trading styles to handle different market conditions, and we have a safe approach for you to manage your risk. And of course, you need to plan some time to practice, and where we foresee market may stabilize upcoming 2 months, this will be the best time for you to get yourself ready to capitalize on the opportunity. And this is just a 30-minute, and even extend to 30 minutes. I apologize that I have overrun again. And we would like to invite you to a free 3-hour webinar to cover the frameworks and how to approach the stock market in a systematic way, and also, of course, a safe way. And we do have intake for upcoming January. So you may scan the QR code to find out about the upcoming webinar, and you may scan the QR code. And if you find this market update is beneficial to you, do recommend it to your friends. All right. So now I'll open up the floor for Q&A. You may type your question in the chat so I can answer whatever Q&A you have, or whatever you're not clear in the throughout the presentation. I will answer you in the chat. All right, EV sector. All right, let's talk about EV sector. So recently we have all these Tesla, Rivian, and also we do see that the rising of China brands EV, BYD, and also all these Xiaopeng, Li Auto, and NIO, and so on. So for EV sectors, we can see that they are having some price war and competition war now. What is the most recent Tesla actions? You can see that they has been slashing their price. BYD and Tesla try to compete with each other to capture market share from the EV market. Despite they're still in line with the mega trend like the clean energy, but currently this sector is having a very stiff competition, where the China EV companies are way ahead of the US one, and it already ate into Tesla profit margin. You can see that if let's say you go to do your own research by going through their reports and statements and so on, you can see that Tesla profit margin are dropping due to a lot of China competitor come in and compete to capture the market share. So they are having a price war now. So it's not so attractive as compared to other sector that are having higher profit margin. All right. So if there is no further questions, yeah, I think I'll end the session, the market update session. So I hope that you all learn a lot, and if let's say you find this is useful, you can introduce to your friends that are active in the stock market or would like to explore the stock market. So with that, I will end the session, and thank you, and see you all, and trade well. Bye bye.